Hello, everybody. Welcome to the Fundamental Analysis webinar this afternoon. My name is Troy. I'll be leading the session. As we get going, let's do a quick systems check. Just type OK if you're hearing me clearly and seeing my screen all right. All right, great. I've got enough responses. Looks like we're up and running fine. Thank you. So there's some fundamental news moving the markets today, as is typical. So we'll take a look at the top headlines and stories and then jump on the charts to see what you could potentially take advantage of. As we get going, keep in mind, as always, each and every trade you take has a risk of losses. There are no guaranteed trades in terms of profits, but certainly each and every trade does have a good potential for profit if you enter with a good strategy and go about things in a nice manner. In terms of risk, you should make sure that you're managing risk in a way that makes sense for your style of trading, for your balance, for your appetite, for exposure on your trades. So you might be using stop loss marks, hedge trades, or even our Ava Protect feature, which we'll take a quick look at, to protect against losses in some way, or to manage the amount of losses possible in some way. And obviously you go after the profits that you want as well. Now, what we go over is meant to be educational in nature and not to be taken as financial advisement. As we go over the fundamental news, understand there's two main groupings that we tend to talk about when it comes to fundamental news or fundamental analysis. One would be regular economic events, like some of the economic announcements that came today at scheduled times for scheduled countries. Jobs numbers, production numbers, this sort of thing, GDP numbers. Those are scheduled economic events that we know when they're coming, what currencies or assets they would likely affect as those numbers come out. And that's one type of fundamental news or fundamental analysis that maybe you could more easily account for in terms of timing and scope. The other type of fundamental news we might refer to as extraordinary economic events. And while the timing of such fundamental news is not as easy to predict, you can still prepare for the unknown headline that hasn't hit but eventually will. And usually that's with a combination of different types of pending orders that can help you be ready for breakthrough movements, for big headlines that could hit that you just don't know what they might be or when they might be, but you do know one thing for sure: eventually there will be some type of unexpected headline that will move the market, and that's where you're left saying, boy, if I would have only had a sell stop pending order on gold or a buy stop pending order on oil or whatever it might be, you'd say, wow, that would have been an easy profit. Well, there's no reason why you can't set up pending orders like trip lines in the market, waiting for those extraordinary headlines to hit, whether it's good news about vaccines or bad news about the Brexit deal or whatever it might be. If that headline hits, you're ready for it with your pending orders to get in on a move that breaks through a support level or a resistance level, or whatever the case may be. Okay, as we go along, please ask questions, give input. Happy to share ideas or to answer questions as we go along. Now, if we look at our main website as we get started, some things I'd like to point out. One is, if you look at our trading platform options, AvaTrade Go is where you'll find the Ava Protect feature. You see here in the order window, Ava Protect. I mentioned when we were talking about risk, it's one way to manage risk. If you're trading on gold, silver, or FX pairings, Ava Protect allows you to protect against any and all losses for defined time periods for a small premium cost when you open the trade. We'll take a look at that on our WebTrader platform as well. It's available on both our app and our WebTrader platform. So some nice risk management features. Also, if you put your take profit or stop loss, it calculates your exposure for you based on your trade size and the prices you put. It calculates your margin requirement as well. And we can see that not just on the app, but also on our WebTrader platform. Anwar, I'm reading your question now. Okay, so when you put a pending order, Anwar, it is not holding the required margin requirement to open that trade. It's not holding it aside. So if the price hit on a pending order and the pending order tries to open, but you don't have enough funds in free margin to cover the margin requirement, that pending order would be canceled as no funds. Okay, and it would be canceled, and you'd see it did not open if you didn't have enough free margin available to open the size trade that the pending order was trying to open at the time it tries to open. Good question. So you might have enough funds when you prepare the pending order, but then if you have other trades that are going and eat up some of your free margin, when the pending order tries to open, if those funds aren't there in a large enough amount, the pending order won't be able to open. So that's why you always want to make sure you have plenty in your account for all of the strategies and trades that you have running so that you don't run into that problem. Okay, so just as the mobile app does, we'll take a look. If you log in from our main website, you'll be in our WebTrader platform, which looks like this. Those of you who've been with AvaTrade for a while, if you have an older account, if you don't see this platform when you log in from our main website, if it takes you directly to the client area instead, talk to your account manager or support and ask for the WebTrader platform to be added to your account, and then you'll see this platform when you log in. It trades right over top of your MT4 and MT5 accounts on the same account. Okay, it's the same account trading over top of it. Now, the chart we can manage, we can slide or we can expand for full screen mode. There are indicators, just like in the MT4, lots of indicators and such you can add. You can switch which candlesticks you're looking at, etc. Very similar to what you're probably used to. Now, what I wanted to show you is if we're trading on gold or FX pairings or silver, let's say I decide I want to buy on gold, and you see the gold shield here, and it's a gold shield even if you're not trading on gold. If you're on silver or FX pairings, if you see this gold shield, that means Ava Protect is available. You see down here Ava Protect. If I highlight that, and by the way, it doesn't function on a demo account, only on the live accounts. So those of you that are new with us, you probably want to set up a live account to really get a feel for all of the functionality that our live accounts have in order to decide if you want to stay with us long term, because you can't really try out all the features on a demo account. Now, Ava Protect, you'll see you can choose 1 hour, $14. If I'm a scalper, hey, if I have 5 ounces of gold and it moves $10, I could make $50. My risk is capped in this 1 hour at 14, 2 hours, 3 hours, 6 hours, 1 day, 2 days. You see it only, the cost of protection only went up from $50 and change to $59 and change, and I doubled the coverage, the protection time period. So I could cover myself for 2 days on gold with 5 ounces, and if it goes the right way over 2 days, great, the profit's mine. If it goes the wrong way and I lose, gold could go $100 an ounce the wrong way within 2 days. And if I had 5 ounces, I'd be down, $500. I would get all of that added back when the protection ends, if that was my negative floating on my open trade. And then I could let the trade keep running. I would only be down the premium. Okay. So very cool feature for longer term trades. And also if you're scalping, short moves, 6 hours, 3 hours, 1 hour, etc. Okay. Now, if you're using stop loss, maybe instead of the Ava Protect, you put your price, it tells you how much you're risking. Maybe I say, okay, I want to do 10 ounces, which is 0.1 trade size. I want my stop loss, maybe the price is 18.38 now. Maybe I say I want my stop loss at 18.28. Okay, I look, tells me here's my possible loss to that price, almost $110. Maybe I say, wow, that's more than 5% of my balance. I need to lower my trade size maybe with that stop loss. So I go to 6 ounces. Now I say, okay, I'm only risking $66. Maybe that's more in line with what I want. But you see, it's calculating my risk for me to my stop loss as I set up my trade. And then take profit, same thing. Maybe I say, okay, I want to take profit at 1900. If it reaches, there's my profit with 6 ounces to that price. I would make 367 and change. And it's changing by the second, right? Because the prices are moving every second. So it's up to the second, adjusted possible profit, possible loss to your take profit and stop loss. Anwar, I'm not sure what you mean by a blanket coverage function, but I would say no. You need to set up for each individual trade your risk management, your trade size. Here's how much has to go to margin. Here's how much you're risking to your stop loss. Here's your potential profit to your take profit, etc. So set up your risk management per trade on how you want to manage your risk. But what's nice is this really does a great job, better than the MT4 platform, better than the MT5 platform, of helping you understand your exposure and potential profit and margin impact on your trades before you open them, before I buy or sell. Okay, so very nice feature, or features, I should say. Now, this is a fundamental analysis webinar. So how can the WebTrader platform help you with your fundamental analysis? Very simple. On the live accounts, Trading Central is completely active for free. It's a premium service that traders used to have to pay for. AvaTrade covers the cost on all live accounts, and you'll see the economic calendar, which is pretty basic. That's on the demo accounts, but the premium features, you'll see, like if I look at analyst views, this is technical analysis, gives you the breakdown of the technical strategy, where the movement's expected to go. So this is a signal. These are live signals. Gives you the price levels, the support and resistance, the breakdown of the indicators, and what we expect to happen, okay? Based on the Trading Central signal. You can switch assets. You have all kinds of live signals here throughout the day. That's more technical analysis. The fundamental analysis we can find as well in Trading Central, Market Buzz. It'll bring up a pictogram of the different assets that are trending the most. The bigger the bubble that you're seeing there, the more news there is about that asset. I'm going to let a couple people know who are saying they can't hear. Anselm. Audio is good. It is just you. Okay, so I'm just letting someone know that our audio is fine. Okay, so yeah, we're looking at fundamentals, Sebastian, today. We took a quick look at some of the features on the WebTrader platform that we offer, but we're about to jump into some more fundamentals. So if Pfizer is something you want to trade on, you know, they're involved with the vaccine development, etc., click on it. It gives you the fundamental articles about Pfizer, the most recent at the top, 1 hour ago, 1 hour ago, 2 hours ago, etc. There are hundreds of them going back 3 hours, 4 hours, etc. So you want to see the most recent article, click on it, one of these. Okay, bring up the article by clicking, takes you to the web page where it's found. There it is. European shares lower as vaccine shots dull COVID economic pain. And you go in and it talks about the vaccine, Pfizer, etc. Okay, so you can quickly access relevant fundamental news to the asset that's listed in the bubble that you click on. Okay, so you click on the ones that are trending the most maybe and check them out, whether it's Google, Ally, etc., Amazon, Tesla, and you can find the fundamental news right away. Okay, all right, so let's quickly go over some fundamental news headlines. This is one that you just saw through the WebTrader platform. I found the article outside of the WebTrader. The WebTrader found it faster. There it is, right? I found that it was important. It was right at the top of the list through another source in the WebTrader. Now, why would, when they say dollar, they mean the US dollar. Why would the US dollar weaken if there's optimism about a vaccine and stimulus? Stimulus is obvious, right? If the US is planning a large stimulus package, which it looks like they're going to have another one near $1 trillion to be printed and handed out. What does that do to a value of a currency? If there's more of it being printed and handed out as stimulus, what happens to the value of any one of those dollars if trillions of dollars are being handed out? It weakens, right? So this is what's been happening with the US dollar. We see the US dollar index dropping even more today. It's down. We see that here in this little snapshot of the market here. And so this is just telling you, fundamental news says USD has more reason to weaken leading up to more stimulus. The markets like it, right? The markets have been going up in response to stimulus. What business doesn't like low interest rates and free money? But the strength of the currency responds the opposite. So that's the fundamentals behind the US dollar getting so weak of late, weakening against euro, against the pound, against even the Israeli shekel and some off currencies the USD has been weakening against. Okay, so very interesting to see these headlines. European stocks stagnant, more stimulus news awaited. So all the momentum that we saw in the markets because of the stimulus, because of the vaccine, it's kind of slowed down now. The buzz has worn off today. If you look at the futures, they're slightly red. You see that? Almost flat, we would say. Okay, the futures are pretty flat, trending a little red. Maybe we're due for a little pullback now in the market. And the question is why? Well, eventually excitement runs out over vaccine hopes and over stimulus hopes. So that excitement drove the markets up fundamentally. And now it looks like the excitement kind of went stagnant. That's what we're seeing here. European stocks, US stocks, futures we see are slightly red. Headline says European stocks are stagnant, awaiting more news, right? Now, if a deal comes, boom, more stimulus, that'll probably, once the deal's signed, cause markets to rise more. But until then, it's kind of like wait and see, right? European shares lower after vaccine shots dull COVID economic pain. Same idea. The excitement's wearing off about the positive news. U.S. private payrolls miss expectations as infections spread. So a little bit more fear in the headlines starting to pick up. The fundamentals are not all glowy and green like they were earlier in the week. I see more negative headlines spilling in and headlines saying the excitement's kind of wearing off. People are in wait and see mode now on the markets. And so that's kind of where we are fundamentally with some numbers coming in that weren't great out of the US and kind of a wait and see mode now on the markets. So let's get on the charts then. If that's the fundamental news, let's see the technicals and see if we can find entry points that might make sense. Okay, so maybe we look a little closer at crude oil right now. Let's expand crude oil. Maybe I get rid of all these extra lines on my chart. Go to the objects list. This is the easy way to get rid of all of them. Just delete, delete, delete till all the lines are off your charts. There we are. Let's start fresh. So what do we see? Crude oil, these are 4-hour candles. We see crude oil climb strongly and then run out of steam here. Up, 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 up. This is over a pretty long period of time. We see an uptrend. If I draw my little alleyway here, that kind of ran out of steam. Up, 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 and then sideways. Let me slide this line maybe just a little out right there. Okay, so now we're going horizontal with our high points. High point, down. High point, down. Resistance, down. Resistance, down. Resistance, down. OPEC had some meetings this week, and they were expected that they would agree to not increase production yet, that they would maintain the production cuts, which helped drive oil prices up. It was production cuts with the OPEC plus nations, plus meaning OPEC nations plus countries like Russia, had agreed to cut back on production to try and drive prices back up to where the per barrel profit is better for those nations that produce oil. And so it worked. They cut production, up went oil price, Here came the OPEC meetings this week, and guess what? They couldn't agree, right? They could not decide for sure that they'll hold off on increasing production. Hello, Natalie from Russia. Anwar, you can do some independent research as to how much each variable affects each asset more or less. But what we're talking about in the webinar here are some general ideas about market optimism and pessimism and how you expect certain assets to move. We did in the last webinar look specifically at market volatility and its effect on different assets. You can look back at the webinar on our YouTube channel from earlier this week, and we paired the VIX index, the volatility index. We could also look at the strength of the dollar compared to gold movements, maybe in the next webinar, okay? All right, so looking now, it looks like a sell move on oil could be an easy technical move. So technically speaking, if I sell on oil right now, which I just simulated a sell on crude oil, where would I put my stop loss if I expect there's a dull in optimism, the optimism that drove oil prices up, along with the idea that OPEC was expected to say, yes, we'll all hold off on increasing production. Only this week, they did not all agree to that yet. Maybe they will still, and then we could see oil prices spike up further. But if they don't agree to continue the production cuts, you could see oil plummet. And so there's not much risk here. Where might we put our stop loss if we're selling to take profit on maybe a drop in oil to the next support level, perhaps down here on the next support level? If oil drops to this support level, maybe that's a spot to take profit. Where might I put my stop loss if I'm selling on oil right now? Above this resistance level, right? So up here, maybe 45.25. So let me modify this. Stop loss 45 point, let's say 3. Okay, so my stop loss is up here, and actually I want to slide that up a bit. 46, I should have said, 0.25 or 46.3 is what I meant to say. So above the resistance up here, not far away, right? It has to break this resistance level to hit my stop loss. Stop loss above this resistance. And where's my take profit? The first support level is here. So I could say at 42.95. Let me modify again. 42.95. Okay, so take profit, and maybe I slide that up to be just above 43 so it doesn't bounce off the even number. Okay, so now I have my take profit just above the support level. Take profit here. Stop loss just above the resistance. My potential profit is larger than my risk. I'm going in the direction of what seems to be the fundamental news right now. No guarantee of continued production cuts, which, you know, if they increase production, down goes oil price most likely. So the idea that people believe there could still be an increase in production of oil, which would increase supply, drive down price, that sentiment is helping to keep oil from breaking this resistance. So in the short term, perhaps oil pushes down to the next support level based on the fundamentals. And the resistance is up here, so stop loss above the resistance. Nice technical move. Technical analysis, you see resistance, trade down from it to the next support. Now we also aligned that with the current fundamental news where there seems to be a bit more fear on the markets. The virus is spreading. Vaccines aren't quite ready to distribute yet. So there's a lot of reason fundamentally why oil could push down. So it's worth a shot maybe to set up like this with limited risk, little bit larger potential profit. All right, so maybe we look at another asset like NASDAQ. What's happening with NASDAQ? Same idea, right? If there's a fear starting to hit the market a little bit right now, and there's idea that virus is spreading, the numbers in the US we talked about weren't as good as expected. Maybe there's a point here after all this rush upward that there could be a pullback then, fundamentally speaking, on the markets. And so if you believe that could be the case, then we look and we say, wow, look at this resistance. Resistance, down. Resistance, down. And it's just trailing along that resistance. So you could say, all right, let me sell on NASDAQ. Let me do a limited risk by putting my stop loss just above this resistance, 12,525. 12,525 for my stop loss. And where might my take profit be? I could be scalping just to the first support level here. So maybe 12,400. And there's the trade. Okay. Take profit just before this support level. You see here it's resistance, resistance, resistance. Once it breaks above, it became support. It hits and goes up, hits and goes up. And so as this comes down, that would be a spot maybe to take profit because it could bounce back up off that support. I'm risking about half of my potential profit. Again, if I win 1 out of 2 on these, if I have equal trade sizes and per profit per point, 1 out of 2 breaks even or profits a little even. If I win both, I make a huge profit, right? So it's a nice setup, technically speaking, and maybe the fundamentals are on our side. Sebastian, what do you mean? What's already secured? What's already secured? You have to expand a little bit. Certainly, none of the trade examples that we're doing here are secured. We hope they go the right way. Yes, if you use Ava Protect on gold, silver, or FX pairings, instead of putting the stop loss, you could put for a premium cost, you have a nice potential profit without any further risk during that covered time period other than the premium. So let's do an example with gold then. Since we're talking about Ava Protect, we'll do the technical analysis on the MT4 and say, okay, what do we think about gold? If there's some volatility hitting the market now, some fears, maybe gold continues to climb, right? If that's what you thought, then you could take a look at an entry point to buy on gold and then protect it with Ava Protect. Don't open the trade on the MT4, open it on the WebTrader and put Ava Protect, right? One thing that's interesting, if we compare gold to, let's say, the dollar index, USD index, let's find it. It's here someplace. Dollar index. There it is. Okay, dollar. And if we go to, let's say, 5-minute candles on the dollar index, what's the strength of the USD doing right now? Dropping, right? For the past couple hours, US dollar is dropping in strength. When the US dollar drops, it's because of expectation maybe of stimulus. Remember, we talked about the effect of stimulus on the USD. So you could be selling on the dollar index, understanding the fundamentals that are driving the USD down would be more stimulus coming maybe. So US dollars weakening. What happens to gold, comparatively speaking? If gold is paired against the USD, what does gold do more easily if the US dollar is weakening? Goes up, okay? So this is a fundamental reason. US dollar index weakening in response to stimulus packages, that sort of thing. That's a fundamental reason why you could have been trading up on gold through all of this uptrend. Now, at some point, the uptrend ends, right? But this is hours worth of climbing on gold that every time gold dipped to a support level, and I'll find, technically speaking, there's a support level, right? Resistance, breakthrough, support. Every time gold dipped, if you bought, you're a winner. Gold dipped, buy, you're a winner, right? So you could look for your technical entry points. Double check first, is the dollar index down? if the dollar index is down strongly, if you catch gold at a low point, in these examples, buying is a good entry point on low point on gold because gold spikes back up as the USD is down. Okay, that's what we've seen. It doesn't work every time, obviously, but overall, if the USD is down and you catch gold at a low point, all day today, gold's spiking back up and climbing overall. Overall, gold's up. Overall, USD is down. Okay, so this is what we would call cross asset trading, where you have the idea that, if one asset is doing something, I expect another asset to do something in response to that. And if the other asset hasn't done its response yet, then maybe that's your entry point. Meaning you see dollar index plunge down on these 5-minute candles, but gold had not spiked up yet. Maybe that's your spot to think, okay, now I think gold will go up, because all day long as the US dollar index dropped, gold was going up. If US dollar index surges down further, but gold didn't spike up yet, maybe that's a good timing to buy on gold before it does spike, right? Or vice versa. If the dollar index all of a sudden goes flying up here, but gold didn't drop yet, your move might be to sell on gold, right? They have inverse relationship for the past months. US dollar index down, gold up. Okay, so if you catch them both in the same direction, one of them is likely going to correct soon based on these patterns that we've seen. Type okay if you're with me on that. Or questions if you have questions. Okay, so just a little insight that if gold right now drops to a support level and the dollar index is still down, if this is still way down and gold happens to spike down to this support level, you might trust that support level to hold rather than break. Okay, so it's you see the obvious relationship here, inverse relationship. Okay, so with that said, we can look at gold and say, what is the high resistance on it? 4-hour candles. Look at this here. You see resistance here. Support, 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 breakthrough candle, right? Let me get rid of this line. Okay, it's nearing this resistance up here. This was a major support level. Support, crash, still held as support here, support up, then finally it broke. Okay, now it's approaching that resistance. What kind of pending order could you place to sell if the price hits 1850 up here? What kind of pending order would sell from this resistance level for you to place now for a shot at a sell from this resistance? A sell limit, correct. Now, it's not guaranteed to win, right? So where would you put your stop loss? Maybe just above that resistance, right? Just above it. If it breaks the resistance, you could have a buy stop pending order ready to buy up here. Because if it breaks through this resistance, then it could be on its way up to the next resistance level here. Resistance, down. So if it gets here and you sell, you're in on a sell limit. Great. Take your profit down here at the next support level. If it initiates your sell limit but breaks through the resistance and hits your stop loss, you could have a buy stop pending order ready to go for it to go up to the next resistance level and take your profit up here at the next price level. Type okay if you're with me on that concept of preparing for breakthroughs, even if you don't know why it might break through. Remember, we talked about that fundamental news that could come unexpectedly at any time. Something could come that could drive the price of gold up and cause it to break through this resistance. And if it does, likely it's going to have a lot of momentum to keep climbing if it breaks that resistance. No guarantee, so you put your stop loss just back below that price level for the buy stop in case it's a false breakthrough. But look what happened when it broke the support. It went crashing down. It took a lot of momentum to get below this price level, right? and then it crashed. So it would take a lot of momentum to break back above that price level. So that's why we expect it'll hit and reverse down. Unless there's huge news, then it'll hit and break through, in which case you get in the opposite direction. Each trade with limited risk. Good question. The question was, is it a good way to trade to put 2 stop orders? Okay, by 2 stop orders for anyone that's new to trading is right now I could say, all right, let me put this is the support level down here, right? This was resistance, 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 then it broke above. And here's the resistance at the top. So now this is support and this is resistance. So the question that's being posed is, what if you use 2 stop orders instead of the sell limit from here? If you put a buy stop up here, if it breaks through, waiting for big news to drive gold up, and also prepare a sell stop below this support in case there's the opposite news that drives gold to break this support level. And my answer to you is that strategy can work a lot of times. The idea here is you're waiting for a breakthrough either up or down before you enter. That is okay as well. And by the way, you still could have your sell limit from here and your buy stop from here. Or I mean your buy limit from here. So I could have 4 pending orders. A sell limit, if the price hits here, it sells. And if it comes down, I take my profit at the first support level. A buy limit, so if the price comes back down to this support level, it buys and my take profit up here. A buy stop, in case it breaks through, I buy, and a sell stop, in case it breaks through, I sell. So I can put 4 pending orders right now. 4 pending orders. Buy limit, sell limit. This is for ranging movements. The buy limit, sell limit, you could prepare them right now for ranging movements. In case it's just a boring news day today. If it's a boring news day, likely gold will hit the resistance and drop. Then it'll hit the support and come up. It'll range. So you could win on your sell limit, your buy limit. At some point, big news will come, and it will, guaranteed, eventually, either break through this resistance or break through this support. And when it does, you could have already traded on these, but when it breaks through, you'll be in on the breakthrough on the buy stop or the sell stop. Okay, so buy limit, program down here to go up off the support if it drops. Sell limit, you program to sell off the resistance. Buy stop, if it breaks through the resistance, you're in, and it would hit the stop loss on your sell limit. Sell stop, you get in to sell at this lower point if it breaks the support, and in that case, it would hit the stop loss on your buy limit. Okay, so in this regard, this is pure technical analysis, right? Understanding there's fundamental news that's driving these movements, right? So I understand it might range today. It might go up and down between this level and this level. So my buy limit and sell limit makes sense fundamentally, but it's also just a technical strategy to trade on the ranging movements. It's also a technical strategy to trade on breakthroughs, because no matter what caused this breakthrough back here, no matter what caused it, I don't care what the fundamental news was. Once it broke the support level, look at the momentum it had. So again, I don't care what fundamental news causes it to break this resistance. If it does, I'm in on a buy. I don't care what the news was. And the same if it breaks the support down here. Josh, you could do this on any asset that you expect large potential movements on and ranging movements on. Doesn't have to be just gold. It could be Euro USD for that matter. Some assets lend themselves, though, to more often have large breakthrough movements, okay? And usually the larger breakthrough moves you see are on assets that are safe haven assets like gold, or global assets like oil, natural gas, okay, palladium, things that are affected by large global news. And the NASDAQ and the DAX and the Nikkei, the large indices, they respond huge sometimes to global news. The currency pairings, sometimes, but they're more specific to regional news. You know, Brexit will affect the pound a lot more than, you know, it might affect the South African rand. So currencies tend to be more specific to regions, and global assets tend to have these types of movements more often because news from lots of places in the world can affect them. Yeah, assets not tied to one country. And by the way, that's why Bitcoin can have such huge movements as well. It's viewed sometimes as a safe haven asset, Bitcoin. It's not tied to one nation. It's decentralized like gold. And so, and like oil and other commodities. So Bitcoin has great technical breakthroughs, great technical movements, as do other cryptocurrencies. If you're into technical analysis, check out the support and resistance levels just like this on Bitcoin. Look at the movements. When Bitcoin reached the near all-time high recently, it had a $4,000 per coin pullback right from an expected resistance level at the all-time high. Talk about easy pickings for a sell limit pending order. It was an easy move. A lot of people made a lot of money on that. Good question. There's no one way to calculate your support and resistance levels. The more points of contact you have for the longer period of time, the more it tends to be a more powerful price level for reversals or breakthrough large momentum moves. So we're looking at 4-hour candles here. Look how many points of contact. 1, 2, 3, almost 4, 5. This is over the course of days and days support level. So it was going to take a lot of momentum to break that support. It was there for a long time. And when it broke, it expectedly plunged. It took big news to break it. How do we know it was going to take big news? Because it kept trying to break it and couldn't. So when it did break, boom, there it went. If we were looking at 5-minute candles instead of 4-hour, then those 4 or 5 points of contact mean a lot less. It's less significant, that type of support level, because you're looking at a smaller period of time. If I pulled up the 1-day candles or the 1-week candles, and I saw that this price level also hadn't been broken for weeks and weeks and weeks back, then I'd say, wow, that's an even stronger price level. Okay, that's the general idea. The longer and it's been there and the more points of contact, the more that support or resistance level can be expected to create strong bounces or strong breakthroughs if they break. Marcella, you can use your mobile app to look at charts as well, but it's not as easy to draw lines on the chart, to use indicators, etc. The charts are smaller, they're less functional on mobile apps in general. Good question. So I would say, use the WebTrader, use your MT4, MT5 platform for doing your charting techniques, and I would use, AvaTrade Go mobile app for placing your trades, for managing your trades, for adding Ava Protect when you're opening on gold or silver or FX pairings, etc. Good question. All right, everybody, I think this is a good place to stop. You've got some ideas about strategies for pending orders, for unexpected news, which would be these buy stop and sell stops, and also pending orders for the news we know now, which is we expect maybe ranging movements right now. So sell limit, buy limit. So I've got pending orders, or you could do market moves for what you know now, and pending orders for what you don't know but might occur. The other type of fundamental news that could hit. And our entry and exit points are based on the technical analysis for proper entry points for maybe larger potential profit and smaller exposure to your stop loss to get to the other side of those price levels. Okay, great. Thank you, everybody, for joining. Good luck with your trading the rest of the week, and we'll see you next week in the webinars.